Right. Good morning, everyone. Host, please, you may begin.
An investment in knowledge pays the best interest. A beautiful quote by Benjamin Franklin. A very good morning to everybody present here. Respected Principal Sir Dr. J.B. Singh, respected Convener Mr. Vaibhav Puri, as well as our esteemed teachers Dr. Kaval Gill, Dr. Japanjot Kaur, and our dear contemporaries. A very warm welcome to all of you. It's a pleasure to have you all present here today.
Today, I, Sehajnoor Kaur, along with Arnav Agarwal, will be your host for the opening ceremony for this year's Monexus'. The realm of finance and investment is an all-encompassing concept that is interwoven with almost every facet of our daily existence. From the cost of sustenance to the workings of the stock market, this intricate domain holds sway over our lives. With this notion firmly entrenched, the finance and investment cell of Shri Guru Gobind Singh College of Commerce endeavors to offer a plethora of seminars, competitions, and events to augment the financial acumen of its members and the community at large. Our team at FIC, or as we like to call it, our family in college, is currently being led by Jaskirat Singh as the president, Khushbu Sadana as the vice president, Aryan Verma as the general secretary, and Anat Paul Singh as the joint secretary.
Over the years, FICSGG-SCC, along with its members, has earned numerous accolades and awards across various academic institutions, earning the distinction of being the best academic society in the Delhi College Awards. FIC has also earned the honor of being the best finance cell in Delhi University, receiving recognition in prominent publications such as the Times of India.
The members of FIC have elegantly represented SGG-SCC in several preeminent colleges, and I take immense pride in the remarkable performances shown by the members of our esteemed cell. So, let's begin this journey by walking you through FIC's events and initiatives.
First up, we have the internship program. It is aimed at providing a platter of skill enhancement activities to young minds through a mix of modules, mock stock competitions, group discussions, personal mentorships, and sessions led by industry experts.
Moving on to our next project, our very coveted financial newsletter, FIC Weekly, an informative yet crisp chunk of knowledge in a bite-sized format. It serves as a one-stop destination for the week's major financial news presented in an easy-to-read format. Weekly boasts an active dedicated subscriber base of 450 plus finance enthusiasts and is becoming one of the fastest growing finance newsletters in the DU circuit.
Giving is the biggest act of kindness. Within the Financial Literacy Initiative of FIC is a student-led initiative imparting financial knowledge to the socially deprived section of the society. Our team comprises self-driven undergraduate students that work together to help impart financial knowledge so that the society can achieve full optimization.
Next, we have the Research and Analysis Wing, under which we've published full-fledged reports on the safe haven assets, slowdown in the automobile sector, the 2008 financial crisis, and the Indian pharmaceutical industry. We started by collecting the data of the past 15 years so as to ascertain the present situation in comparison to the past. This is done by using different techniques of ratio analysis, trend analysis, technical analysis, etc., and hence creating full-length reports.
Coming to the events, first up, we have Monexus Junior, a 2-day extravaganza held in the month of October consisting of 2 events which provide exposure in the finance field. It attracts students from schools across Delhi with an approximate footfall of 800 students who come to dive deeper into the financial world through our events. The events also help them enhance their theoretical knowledge about financial markets. It is an opportunity served on a platter for school students to explore the functioning of top DO colleges at an initial stage of their lives.
Just this year, we added another feather to our cap by hosting Finessance, an interesting harmony between the quizzing world and the financial realm, receiving exceptional feedback from all its participants.
Next up, we have the event at hand, Monexus, which is the flagship event and annual fest of FIC SDG. It is a financial event that helps participants to not only learn about economic intricacies, but also about the financial complexities of today's business environment. This event provides participants an opportunity to exhibit their innovative skills along with the financial knowledge. It has cash prizes of rupees 80,000 and total prizes worth over 1.2 lakh rupees. Monexus consists of 4 main events, panel discussions, and conferences spread over a period of 3 days. It is usually scheduled for the month of March.
Hope that gives you a glimpse of what FIC is all about. Monexus has a long-standing tradition of inviting distinguished speakers from the finance industry every year. These experts possess a wealth of financial knowledge and expertise, and they never fail to enlighten the audience with valuable insights to take home.
And this year is no exception, and we are thrilled to introduce our esteemed speakers for today's event. Ladies and gentlemen, it is my pleasure to welcome you all to our speaker session today. We are delighted to have with us Mr. Pranav Thakkar, the Vice President of Alvarez & Marsal, a global professional services firm. Mr. Thakkar is an accomplished professional with an impressive track record in the field of finance and consulting. Mr. Thakkar has been a panelist at BBN Times, a leading business and finance publication, where he has shared his insights on various topics related to finance, consulting, and entrepreneurship. He has also contributed to investing.com, a premier financial markets platform where he has provided valuable insights and analysis on global economic trends and investment opportunities. Today, Mr. Thakkar will be sharing his knowledge and expertise with us, drawing from his extensive experience in the industry. Over to you, sir.
Hi, thanks a lot for the kind introduction. Good morning to one and all present. This marks my probably a 50th discussion with some of the colleges like yourself, Hansraj, and other universities in Delhi as well. We've been doing this for the last 2.5 years now, and it's been very interesting and a good learning experience for me as well when I speak with students like yourself who want to get into finance and consulting and are not able to find that edge without doing an MBA, right? So I think that's where I come in, and that's where I can help you guys to get into some of these jobs which are reserved and categorically earmarked for MBA folks. I think it's changing. We are doing that for fresher CAs. We are doing that for fresher graduates in the commerce field as well. So my goal and aim is to help people who are not MBAs to get into some of these skills, and hence I'm here to help you guys and answer some of your questions. Looking forward to this event. Thank you so much.
Thank you, sir, for such a remarkable speech. Next up with us, we have Mr. Vikram Dhawan, an esteemed investment and risk advisor, who currently serves as the fund manager of Nippon Indian Asset Fund. Mr. Dhawan brings with him a wealth of knowledge and experience in the field of investment and risk management, and we are excited to hear his insights on these crucial topics. Mr. Dhawan's professional journey includes serving as the vice president at Reliance Capital, where he contributed significantly to the company's growth and success. He has an impressive track record of managing complex investment portfolios and providing financial advice to his clients. Today, Mr. Dhawan will be sharing his valuable insights on investment and risk management, drawing from his extensive experience in the industry.
Yeah. Thank you very much for the introduction. I hope I am audible. Can you hear me?
Yes, sir.
Okay, great. All right. So there was some audio glitch. Okay. So I believe you just want me to speak for a few minutes and then we go into, is that how it is scheduled?
Yes, sir.
Okay, all right. All right. See, I'm always excited to meet young people because, as much as you want to, sort of celebrate the history or, be sort of aligned to it or have some sort of emotional attachment to what has happened in the past. But fact of the matter is that whether people of our generation like it or not, you guys are the future. And wherever this world is heading, wherever this country is heading, you will have the maximum influence. I mean, we can call you by any name, Gen Z or Gen, I don't know. Next day they've run out of alphabet, it seems. You've already come to Z. It doesn't matter. It doesn't matter whether you are deep inside the Gen Z category or deep outside the Gen Z category. It doesn't matter, because the thing which I want to impress today is that life, whether we like it or not, will come with a lot of to use the cliched tagline from Spider-Man, with a lot of power comes a lot of responsibility. So the higher you go up in life, whilst it may look very glamorous and very exciting to the others, but you yourself will know that how much difficulty and how much responsibility and how much, I don't want to use the word stress, but yes, it can, if you cannot handle the responsibility well, it can result into stress. I mean, we all love football and cricket, Virat Kohli, Lionel Messi, and we marvel and envy their journey. But I wish we could be inside their heads when they were actually at a situation where there was a millisecond difference between getting the World Cup for the country or losing it. So my suggestion today is that in any field, all of you will have different growths. There will be there'll be students in your colleges which will be way ahead of you. There'll be someone who will be way behind you. Nothing like that. Everybody will have to, come up at their own time. And it is better that teachers also recognize that we should not start, sorry to use the expression, a rat race while you're in college, because college are not the best years, because you don't have to earn for, most of you may not be required to earn for, a sustenance, but college years are the best, because as they say, when you're young, if I use a very industrial analogy, when the wires, when they are young, they are very ductile and malleable. But as they get older and bigger, it is very difficult to mold them. So don't be into any haste. Make your stand, make your choices, embrace failures. And I would also like to talk about toxic positivity also going ahead. Remind me if I don't talk about it. Then nothing to feel bad about it, because your life will depend upon how many failures you had the courage to take, and that is when you become a complete person. So I'll stop over here. Not too much of philosophy. I'll talk about finance also later. But yeah, so I think I would like to end over here, and I'd like to take any questions you have whenever the Q&A starts. Thank you very much.
Thank you for sharing your valuable experiences with us, sir. And finally, it is our honor to have with us Ms. Meghna Joshi, a certified life coach and the founder of SWAN, which is a skilled workforce advancing nation. Ms. Joshi is a social entrepreneur with a decade of experience working with startups and in the corporate sector. She is an expert in project delivery, project management, and building capacity for the informal workforce, not only across Delhi NCR, but pan-India. Ms. Joshi's work with SWAN is truly inspiring. Through her organization, she has been empowering the informal workforce in India by providing them with the necessary skills and training to enhance their employability. Her work has had a significant impact on the lives of countless individuals, and we are honored to have her share her insights with us today.
Thank you so much for having me here. So seems like, Delhi University is full of fests and events. Just day before yesterday, I was in Girodi Mill College and, they had their own fest, which was organized by the Center of Innovation and Social Enterprise. And because we are a youth-led organization, we love to interact with, students, particularly youth, young generation, because, like as one of my co-panelists just spoke about, you are the future. And when we are talking about youth, we should never forget that we also have children who are coming from the marginalized section of the society. And one of the very wonderful initiative which the cell is also taking is to impart the financial literacy among the marginalized sections. So in order to create a more equitable environment. So, how can we create a balance between, the upper class and the lower class, while bringing everybody in loop and leaving no one behind is our objective. And yes, looking forward to interacting with all of you, all the wonderful minds. We would love to touch upon a lot of aspects related to skills, related to job, related to upskilling opportunities, also mentor connect, industry support, which might be of interest to you. Thank you.
Thank you so much, esteemed panelists. I hope you were ready with the opening note. So, Mr. Pranav, can we begin with the opening note of the particular agenda?
Sorry, sure. Definitely. So, so basically, we are here to discuss, some of the impact that probably the recession, as we call it, will have in the next few months or maybe a year or two as well, right? And as students, I think some of us, including me, I would consider myself as a student as well, because I have seen the stature of the panelists that we have here. We would want to understand, some of these uh, uh, areas of improvement or areas of upskilling for students as we are studying right now, and how can we be job ready, right? That's the whole theme about today's conversation, right? And I think I would want to probably start with Meghna, if you allow me. Typically, we've seen recessions in the past, and because of your plethora of experience that you've had in the last decade or so, right? And because you're also in this upskilling service, right? What areas of improvement or what areas of upskilling do you see for students like these, right, who are in probably in their third year of graduation or second year of graduation, and they still have, let's say, a year or two maybe to probably get into the job market entirely? Is there something that they can do in the interim so that this goes well for them? Probably they are recession proof, as we say it. So yeah, over to you, Meghna.
Okay, I think this is a very interesting question. So I would like to answer this question in phase. So so pre-COVID situation and post-COVID situation, because I have personally been interacting with a lot of youth, particularly both the college students, working professionals, those who are looking for job. So prior to the COVID situation, the main question was more into how to get a suitable placement opportunity, what skills do they need to learn so that they get sustainable job opportunities, what industries to choose, and questions around the same. But during the time of pandemic, this focus entirely shifted. The focus was more on on trying to understand their own core self, trying to understand their own potential, the creative things that they can work on, so that they are able to create or co-create something of their own. So during the COVID situation, when we saw that a lot of jobs were cutting down, there was a turmoil, a lot of industries were shifting to a completely different domain. The focus of the students from just focusing into the placement opportunity shifted somewhere in between, to how is it that they can utilize their core strength areas in order to find a sustainable job opportunities for them, not just job opportunities, but also how safe will it be to have an enterprise of their own, basis on the ideas that they have in their head, they had in their mind. So this is like a transition that I have seen personally while talking to the people. There are a lot of questions in terms of the packages, the placement opportunities, the skills that they should learn, but somewhere or the other, the need or the urge to find the inner strength, the core strength, with which will form the central point of how they can get to either co-create something of their own, or maybe find a sustainable job opportunity for themselves, has been the central point.
Sure. No, definitely. Just to add to what Meghna said, right? I mean, the risk of recession in 2023, as I see it, specifically when it comes to the financial markets or when it comes to the job market, is slightly very different, right? And we'll probably discuss the nuances when we go in deeper into what happened in 2008 and what's happening today, and how are things different, right? Today, I think a lot of people have upskilling opportunities, right? A side hustle culture is also very, very, very prevalent, which was not there in 2008 again, right? So some of these nuances actually make this scenario that we are in today very, very different, and I think more people are ready than they are not, right? When it comes to 2023, maybe global recession, if we have to call it that way. But I think it's very different, and also from the finance perspective, right? The reasons that led to it, right? That's more important than the situation that we are in today, right? You may call it that it's recession in 2008 and recession in 2023, but the reasons that led to this recession or this downfall that we see today is very different, right? 2008 was completely an impact because of the housing bubble that we had, and cheap loans that were given to unwarranted individuals, and because of which it led to the housing bubble burst, uh, right? But today, as we see it, right, we still see strong growth numbers, right? It's not warranted by cheap loans, cheap credit facilities, right? Interest rates are on the hike as well. And then still we are seeing that inflation. So the scenario is very different, right? It's not a bubble that we are seeing. We are seeing increase in prices, but for different reasons, right? Because of COVID, the rates were lower, and hence there was a lot of liquidity in the market, because of which it led to different scenarios, right? So hence I think it's different, and I think we'll probably discuss it as we go ahead. Maybe Mr. Dhawan, you would like to add as part of something as part of the opening note. Over to you, sir.
So what is recession actually? Recession is when there is a shrinkage of the economy. Typically, the economy should grow. There is a nominal rate of growth. There is a real rate of growth. Nominal rate is the actual rate, and the real rate is when you, let's say, reduce the inflation rate. So let's say the economy is growing at 15% and inflation is 10%, and the real GDP growth is 5%. But whenever the economy is growing, not every sector is booming. There are some sectors which are doing better because it's an average. It's like tomorrow your class gets an average 95% rates. Not everybody will be at 95. There'll be somebody at 65 and there'll be somebody at 100 also. So that is how the economies work. Also, recession, not many people are killed by poverty or unemployment, but a lot of people go down or are killed because of depression and what I would like to call is toxic positivity, which I think you guys need to these two things, they are two extremes of one thing, of a situation. So, and recessions are important because they rebalance the economy. It's like you cannot run an aircraft or a car at its maximum speed forever. Something will break. So it is the duty of the central banks to ensure that whenever the car is overheating, the engines are getting strained, they have to slow it down so that there is no untoward incident. But easier said than done. There are a lot of first of all, it is very difficult to predict data. Second of all, there are a lot of socio-economic political compulsions, which they may not be direct intervention by the state, but they will have their own. They don't want a situation where there's a civil riots happening on the street just because the central bank had a plan. So it's not easy. It's very complicated. But I think from your perspective, what is important is that to have a slightly granular view of the recession. Let me tell you, even if we go into recession, which is a if right now in 2023, there will be certain sectors which will be doing well. I don't want to get into all this because that's a different, sort of discussion altogether. But what you need to worry about right now is that not to be depressed if you see a near or a midterm sort of a darkness in terms of getting jobs and getting admissions or whatever is your want to start a business, you're not getting funding, because the sentiment is like that. And there is no point, as they say, flogging the dead horse. If the sentiment is down, no matter how much you whip it, it will not stand up, and it will stand up on its own time whenever the other thing you need to worry about, I think I'm using this term for the 10th time, toxic positivity, is that so much sure about what you're doing that you are neither open to ideas from people in your industry, from your peers. You don't even read at all about what is happening in your field or the other field, and you somehow have this, sort of, an extreme self-assurance that what you're doing is right, and this is something which is, well, one positive way of identifying it is conviction. But you are young. It's good to have conviction and things. It's like Sachin Tendulkar had a conviction to play cricket, but then he left his studies and all those things. That is one aspect of it. But the other aspect of it is that trying to see your situation with a colored glass. That okay, fine. I mean, I'm in this field or that field. I'll not listen to anybody and I'll do something. So you need to be careful about both the things. The best thing to do when the chips are down is to have big ears and big eyes, because somewhere, things have to fall down to go up, isn't it? So you would rather buy a stock when it is at 52-week low than buying it at a 52-week high. So if things are going down, treat it as an opportunity. Have self-belief that, this is something which is an opportunity. From things cannot go any worse, isn't it? When you're at the bottom, things can't get any worse. So you're starting from the bottom, things can only go better. But use the experience of the other, the sage advice of the others, and read, look around, see what is happening in the world, be open to suggestions and ideas. And when the going gets good, you will be able to ride the wave, and you will be able to take the opportunity of the next boom. So there will be booms and busts. You don't need to be disheartened. This is not the first boom and bust which I have seen in my career. And every time a bust happens, they say this is the last one. There's no other. In fact, I remember one of the a very leading hedge fund managers who's got like a million or a half a billion followers. He in 2019 or 2019 or 18, he said that the world will not face any more recessions. And so yeah, so don't be that person also, which sort of as you have the if you would have seen the American cowboy movies, where the cowboy, the villain says something, a big statement, and the next moment he's shot and he's lying down. So don't be that person who loves saying this famous last word. Be humble, be alert, and be open to everything. So that's all I would like to say.
Thank you to all the speakers for the opening note. Now we have a few questions for our panelists. First question, what are some strategies that you would recommend for someone who is looking for a job during a recession? Meghna ma'am, we would love to know your views on this.
Okay, so this is again a very interesting question. So basically, we have seen that, there is a lot of frustration, particularly among the young generation, when they are looking for when basically there are no jobs available, or when during the times when layoffs are going on. So one of the strategies could be listing down your core niche area. So I think I have also prepared a short presentation for you guys. I think I would like to share that a little later. But selecting a list of jobs which form your core niche, and then reflecting upon your sector, your role, your priorities, can help you in keeping focus at your end goal. Always know how to learn new skills, particularly the skills that are market based or that are in trend, which can help you to upgrade yourself at different levels. Keep updated your LinkedIn profiles, keep updated your resumes, so that wherever it is asked, you have it in place. You can also consider freelancing as one of the options, apart from the many that may exist in front of you once you have selected your list. Maybe you should try to create your own networking circle, because when you have your networking circle, no matter what the situation may be like, you will still get some kind of help or support in during the times when the things are in a turbulent state for you. So that are some of the points that I would like to touch upon, and remaining I would like to take it forward.
So can I add to that, please, with permission?
Yes, sir.
Sure. See, first of all, you may, if you have zeroed on what you want to do in life, even in good times, you'll be lucky to get the dream job in that field. Let's face it, you want to be a pilot, or you want to be a fund manager, or you want to be a doctor, but not many of you will end up, flying a plane for Emirates or whichever airlines you like, or, Indigo or whatever. And not many of you will end up in Stanford Medical Center, or as the case may be. So in good times, also remember that, whatever you've, again, life is not fair perceptibly, because we think, somebody has got a easier career path. No, because I think we need to be ready. I'll give you an example. We take a lot of interviews of people, and that is something, that one skill that you need to understand, that whenever you're going for a job interview, you have to be prepared, not just about the role and everything. You need to be thorough with that and what is being offered, but you need to be very sure what you are bringing to the table. You just cannot show up and say, I need this job because I'm the smartest guy around. No, it doesn't work over there. You have to study. If you're going for an interview with an infra company, study about the company, study the balance sheet, ask them questions. Even if the interview doesn't go well, stop the interview and say, I have a few questions. Never ever don't be in a subservient or a situation whenever you are meeting. And that is something which comes to us culturally, because whenever we see authority, whenever we see people who are more famous, we tend to be a bit subservient, and there's nothing wrong with that, but you need to be polite, but you need to be firm. The first thing is, when you're taking a job interview, what do you bring to table? Second most important thing is, I've had a lot of people in my network, and I have a very large network across the world, where people have gone from banking to telecom, from telecom to medicine, from medicine to teaching. So first of all, you should have a handle that if you're looking to stay in India, which are the industries which will grow in the next 5 to 10 years. There's no point going into, I would love to take you all in my industry, but banking industry is saturated, mutual fund industry is saturated. Where is the growth coming? It is coming in infra, it is coming in telecom, it is coming in technology. And last but not the least, our job choices will be determined by where the technology is going. Electric car, 5 years back, nobody bothered about it. So see what is happening in electric car. What can you do? Just to give an example, after 8-10 years, there'll be a lot of batteries which needs to be recycled, and these electric car batteries are very expensive, 40 to 60% of the cost. So look around, be open, and even if you have to change your profession for a short while, it doesn't matter. You have to be open, because you are like players. There's no point you say, okay, I will only play for Mumbai Indians, or I'll play for Delhi Capitals. I will not play for any other teams. Unless they call me, I will not play. It doesn't work. Play in whatever team you're playing. Clock experience, and I'm telling you, I worked in a lot of industries, unrelated industries. I did such unrelated jobs. And when I sit down right now, when I'm analyzing a company, when I'm analyzing a situation, it is all a sum of that. What Steve Jobs said, that you can never connect the dots forward, you can only connect them backward. So, that is the most important thing for you. Thank you.
Thank you for the insight, sir.
So,
So the
I
next,
tend to use a lot of time. Please interrupt. Feel free to interrupt me if I'm encroaching on anybody's time. I'm sorry for that. So
no problem at all, sir. So the next question that we have is, what are the safest investments to choose during a recession? Pranav sir, would you like to add to that?
I think you're on a mute, Pranav.
Sorry for that. Thank you. So, when it comes to investments, right, irrespective of a recession or otherwise, right, it's most important to invest in something that can create value for your future, right? And when we are speaking about recession, it's important to invest in skills and knowledge. A lot of times, a lot of people change folks, right? They take a sabbatical from job, they go back to probably a B school for a 1 year of entrepreneurship course or 1 year of upskilling course in some Stanford or Harvard or some university, right? They do that course for a year and they come back, right? I think that has been a lot of that brings a lot of value to their employer as well as increases their value, their potential employer as well, right? Because when a recession, they're not of the system, they're probably skilling themselves in some part of the world, and it goes away. Right? When we are back on track, they are also with new
Excuse me, sir.
skills.
So sorry to interrupt, but I think there's a network issue. Your voice is actually breaking a bit.
Okay. So just maybe. Is it better now?
Yes, sir.
Perfect. So I was saying, when it comes to investment, I think knowledge becomes very important. But when it comes to, let's say, assets as such, or maybe real assets as such, when we speak of it, I think commodities like gold, and because they are all they're all
So I think we lost you. I think Arnav, we can carry on. If Sir comes back, we can resume.
So moving on to the next question. What are the root causes of a huge Silicon Valley bank falling or collapsing? Meghna ma'am, would you like to answer that?
Okay, so first of all, I have a short presentation to set the context, okay, of this entire recession, that the topic of recession that we are talking about largely, and particularly recession in 2023, wherein there's a very interesting quote that I borrowed from the reports of World Economic Forum. So recession in 2023 depends upon where you are in this world. Okay, so basically, where do you see yourself in this world will determine this entire concept of recession 2023. And when we are talking about some of the forecasts as per the Global Economic Prospects report of the last year, it is expected that on an average the global growth is going to be close to 2.7 to 3%, and the entire period from 2020 to 2024 has seen or will see growth, an overall growth of under 2%. Okay, now what does that mean? Okay, so what could tip in the global economy to this entire point of recession can be some of the reasons, like the fragile economic conditions, new adverse developments like high inflation rate, then abrupt rise in the interest rate, resurgence of the COVID pandemic again, and also escalating geopolitical tensions. We are seeing the wars happening at different intervals, which can also lead our economy, our global economy, into the a period of recession. Then moving over to, the risk of global recession in 2023 and how much will it hurt us? Okay. And what are some of the ways that it can hurt us? Okay. So some of the points could be in terms of the negative sentimental shock that we see from the consumers who have the purchasing capacity, but they are not, able to purchase. Then also supply chain disruptions, worsening energy availability, tighter financial conditions, layoffs and job cuts, definitely, and also unemployment. But still, strong businesses can take this opportunity to, thrive labor and capital back into the most economic way in order to keep their enterprises sustainable. Now coming over to the things to do. Okay, so what are some of the things that we can do? Okay, how can we make the best use of this entire opportunity of recession, wherein we are talking a lot negatively about how things are going, and what the situation is like. So the best way could be to watch out on our spendings. Okay, basically we should avoid taking undue risks. We spoke about some of the best ways of savings in the previous discussion. So investing in making your portfolios diversified, not having everything in one basket, okay, can help you to sail through different or given situations. Also thinking very carefully if you are planning to leave your job, making realistic budget plans, to establishing an emergency fund, and also investing in your upskilling, in basically upskilling yourself to the latest market trend can help you in keeping afloat. And to end with this short presentation, then again, the same question I would like to pose to you in order to in order to want you to reflect and think upon. So what does recession in 2023 mean for you? So basically here you are, and here is your core niche area. Then comes the market in which you are trying to venture in between the recession period, and also the larger industry to take into consideration, which may be looking forward to employ you, considering the kind of skills you have, considering the kind of energy you have, and also the passion that you possess. Yeah. So over here I would like to take this opportunity to pose this question on you, and to so that you reflect upon where is it that you stand in a given market, in a given industry setup, given the niche area, given your own core strength area, and where you would like to see yourself in future. Yeah.
Thank you, ma'am, for such an insightful presentation. Vikram, sir, would you like to add to what are the root causes of the collapse of a huge Silicon Valley bank?
So why do banks collapse? Because when they have an asset liability match. What are the assets of the bank, the capital they have, and what are the liabilities of the bank? So whenever there is a mismatch in if they have so eventually, what is the net worth of a bank? It is difference of the asset liability, asset and liabilities. Whenever the asset liabilities goes to zero or it becomes negative, a bank becomes insolvent. Now, in case of so regulators, what they do is they prescribe what is the minimum capital you need to keep with regards to your asset and liability. So let's say your entire balance sheet is 100 rupees. So they will say, okay, keep 5% net worth or 10% net worth. And it varies from country to country. I think that is something you probably Google after I say this in India, how it works. But when that asset liability match is more than the capital or the net worth the bank has, then the bank becomes insolvent. So it can become insolvent if there is a non-performing assets or loans which are not being paid. They have to write off a very big amount. The way it happened in 2008, the run on banks happened because there was a mortgage crisis. Everybody in US, because of low interest rates, was basically buying 1 or 2, 3 homes at astronomical prices, and things have. So recessions actually not only bring the economy to ground, it brings people also to ground. Egos and attitudes and wrong practices are also have to be corrected. Unfortunately, it's like in our life, when people tell us don't drive too fast, but unless we have an accident, we will not learn. So that's unfortunately is the case with a lot of people. But in case of Silicon Valley, two things happened. First of all, it was into this tech sector. It was heavily, leveraged towards the tech sector. And if you must be reading in the past 2 years, post the pandemic bump, tech sector has been the biggest, loser in terms of jobs and in terms of destruction of capital. That is one thing. So that created a lot of headache for them in the advances that they had given. Secondly, what happens is that bonds, the higher the maturity of bonds, the more they are sensitive to interest rates movement. So typically what happens is that when the interest rates go up very sharply, the bonds prices fall to match the return. So let's say today the bond interest rates are 0, bond will be at 100 rupees. But to give you a 5%, please don't take it as something of an instruction, but I'm just giving you an example. It's a very rough example. So to create a 5% interest for you, it has to go to 95. So the higher the interest, if it goes to 10, 20%, the bond values fall. So their capital fell down because they had invested in these high, duration or high maturity, longer maturity bonds. And it all came together at a worst time when their advances were getting, sore and the capital was. So that was in a nutshell what happened with the SVB. Now I would like to add a couple of things over here that, typically what happens is that, you can fuel growth either with equity or with debt. But unfortunately, what has happened is that the world has become very indebted. So I don't have the exact figure, but the debt to GDP ratio of the world is about 300 times. And India, we are almost close to 100. There are countries like Japan, which have got 2 to 4 times GDP. US is more than 100%. Europe is close to 1.5. Italy, some countries like Italy are very highly indebted. So now the central banks are in a very big dilemma. If inflation comes and they have to raise interest rate to control inflation, the interest cost goes up, the bond value goes down. But if they don't raise interest rates and inflation goes, haywire, then what is inflation? I mean, today, if you're getting an interest rate of 6% from your fixed deposit and the inflation is 6%, you are making zero money in real terms. So, and if let us say your fixed deposit is giving you 6% and inflation is 7%, you're actually losing money in real terms. So it is eroding. So inflation is the biggest pickpocket, silent, robber of your wealth. You may feel very happy that, I am growing by 10%, 15%, 13% CAGR, but see how much inflation you have in your sector. If you are matching the inflation, you're basically doing nothing but, matching the price increase. So it's a very big dilemma for the world right now. And I don't want to dwell in what's going to happen in that, but you will have this situation of extreme economic swings, extreme market swings, extreme swings in currencies and gold and everything because of this very high indebtedness, which is not going away. I mean, unless we have such a massive crisis where all this debt is written off at one go, this is going to persist. So that is why the developed countries, their growth rate have shrunk because of this. And India still today is very young. I mean, I'm assuming you guys will do very well and you add to the tax kitty of the country so that our debt to GDP ratio comes down. But this is unfortunately the situation right now. But I think that is where lies the opportunity also. You will have to be slightly more careful in choosing your career path, the organizations, the people that you align yourself with it. Most importantly, you have to, let us say you talk about India. India is going to be always, no matter how much manufacturing we bring onshore, we're going to be growing only in services. So services, technology, and you asked a question about investing on yourself. Invest in two things: upskill your technology skills and upskill your health. Give yourself more weightage on the points you give yourself. Today, if you've gone for a 5-kilometer run, you should give yourself more weightage than doing well in your exam or cracking your interview. So have a balanced life. Job is important, but let it not be the only anchor that you revolve around. Because otherwise it will become very difficult to continue. Any relationship with whether your parents, with your partners or your brother and sisters, you need breaks, isn't it? You need a balance. You cannot be close together, otherwise it leads to a lot of problems. So have a holistic view about life, build your health, invest in yourself, and last but not the least, look around the world. Unfortunately, India, there's not so much of that is available, and that is something which needs to be appreciated of the West. There are a lot of universities across the world which give you free courses in technology, in medicine. So they're free. Go and do it. And even if you have to borrow money to go there for 1 or 2 days or 3 days or 5 days of a campus thing, do that. Invest in yourself. Because ultimately what you experience during the downtime will make you a person when your time comes. As Churchill used to say, that whenever fate taps you on your shoulder, you should be prepared for it. So prepare yourself for the good times ahead. That's what I like to say.
Very well said, sir. I'm sure everyone here learned some really valuable lessons from this. Pranav, sir, would you like to add anything to this?
So, yeah, so, because we were talking about the collapse of SVB Bank, right? Just a couple of points that I wanted to add to Mr. Bank, right? It's covered elaborately, extensively, but just to make it a little simpler for us to understand, right? Why this got triggered, right? Interest for the last 18 odd months, right? But why did it happen today, right? So just to give you a perspective, most of startups in the West as well as in India, right, had parked their money with SVC and interest 2%, or
Sincerest apologies to interrupt you, sir. Sorry, your voice is breaking again.
Don't know what.
No, sir, it's breaking only.
Can you hear me now?
Arnav, maybe we can move ahead.
Okay. So the next question that we have is, what should the citizens do in case where banks collapse? Vikram, so would you like to elaborate on that?
So what happens is that when the bank collapses, the regulators will, infuse capital in it. Like with what we saw in India, we had a collapse in GTB and we had collapse in ILFS, which was an NBFC. So in Indian case, what we have done so far is the Reserve Bank of India has infused capital, and through equity or directly or through other, so that sort of creates reinstate the capital, regulatory capital they need to run the bank, so they become solvent. So even if, let us say, their asset liability matches 100 rupees, so the bank will ensure at least 100 rupees of capital they have, so they become solvent, and there's no need for that. But in the West, what they have two-pronged approach. What they have been, like in the case of Lehman Brothers, the Federal Reserve was too late to sort of rescue it. And already there was a run on the bank, and there was what we call as a collateral consequential damage in the market. So in that cases, when people lose faith in the bank, in that case, you have to do two things. First of all, you have to ensure all the deposits which the the depositors have. And secondly, whatever is the collateral damage, if the equity is falling or if the bonds are falling, the central banks will have to buy them to ensure that it doesn't lead to any sort of a contagion. Because what is a contagion in the financial market? That there is a log jam. It's like a machinery. If one part of the machinery log jam, the entire things. So what the regulators do is to ensure that this machinery keeps on, and the lubricant for that is money, of course, to put more money and do it. So you'll see more of it, but unfortunately, this will lead to a lot more money printing, and that is where the fear is right now. That if there are more bank collapses, or what we call in our terminology as credit event, happens, then already the balance sheets, and that is something you should Google after this, the balance sheets of central banks across the world are more than 30 to 40% of the GDP, which is huge. They should not be having this big balance sheet. I mean, there's a $9 trillion balance sheet which the Federal Reserve of US runs, which is 3 times the size of India. So you can imagine the kind of money which has been printed and let into the system. And if more credit events happen, then more money will be printed and left into the system. And what it does is, and here I give the example of what inflation does. So for instance, gold is a very good yardstick to figure out where the inflation is. So for instance, if you have these normal iPhones, and if you cast the gold into this kind of shape, that will be about 2 kilos, because gold is one of the most densest materials known to world. And just imagine this size of the cell phone. And if you have to stack money, 1.2 crores close to it, you can imagine how much money supply has increased and how with respect to gold. So, that is unfortunately what has happened, because money supply brings, it's like sugar. You have a lot of sugar, you feel very nice, but after that, you have to pay the consequences of that. So money supply will act as a rush, as an adrenaline or a sugar rush in the market, but then it leads to a lot more imbalances. It's like, in your terminology, if they pass everybody in the class, then a lot of people who should not be passed will also, or everybody is given a distinction or a lot of people who don't deserve it, and then the future somebody will have to pay the. So that is the unfortunate, dilemma which we are having, and that is which is the crux of why people think recession may happen, because we are into a sort of a lose-lose situation as far as the central banks are concerned. If there are credit events, they will have to bring down interest rates and leave the fight against inflation. If there are no credit events and if they fight inflation, then that can lead to some more stresses, because as the interest rates are rising, it is leading, for instance, 2 years back, you could borrow money overseas at 1%. Today, you have to borrow it at 6%. So you can imagine the difference of, it has made. So yeah, so I'll leave it at that. Don't want to confuse you more on this, but fact of the matter is that, yeah, we are living in a very dynamic world, but let that not affect you. Let that not affect you, a recession or what's going to happen. You'll hear stories like this country is bust, this country is finished. Nothing like that. Nothing finishes. Nothing bounces back like the human spirit. I mean, you look at Ukraine, nobody gave them even 20 days to stand up against Russia. There's so many stories that you have. And our Indian cricket team, women cricket team, and so many stories that we have. So ultimately, the human spirit has to trump, and you have to be those humans to make it happen.
Meghna ma'am, we would also love to know your views.
Over here, sir mentioned that there are a lot of stories, because sir has already, given a good understanding on this entire concept. He's an expert. I would like to quote one of the life stories, and it is the story of my mentor, who's from the Sherry Blair Foundation for Women, and also she's a trader at a global hedge fund based out of UK. So, she started her career at the peak of financial crisis, when this entire, crisis of Lehman Brothers falling, the crisis happening. And she was, just the same age as that of you all. So she was just 21 years old, coming out of her graduation, and looking out for placement opportunities. And she got through one of the financial organizations based out of UK. And then this entire during the year of 2008 2009, this entire financial crisis happened. And just imagine yourself, you getting into a sector, being a fresher, and then entering into this entire situation of financial crisis. What all will be your struggles, what all will be your comprehensions in terms of how to work, under what pressure do you work, and how to work. So the entire last year, as a part of my mentorship program for my startup, I used to have a discussion with her. So she used to tell me that, look, Meghna, the kind of pressure I worked in when I was a fresher, while working at the peak of the financial crisis, made me the person who I am today. And at this point of time, if anybody asks me about my business, I know it in and out. So be it any collapse, be it any recession, be it any crisis that happens, if you are in a situation and if you are able to learn, comprehend, adapt yourself to the given environment, that will make you a person of integrity. That will, you will be gaining the next level experience. You will know how to handle things in and out, and you will be able to guide, lead, and become a more experienced person later on. So this is a life story of one of my mentors, which I wanted to share with you all. And maybe I can also connect you with her. She's based out of UK, and she's also one of the hedge funds expert. She's a trader. Maybe she will be the right person to brief you more about this entire situation. Yeah.
I think one specific thing I'd like to add over here, and just seeing what is happening in the world. See, today, knowing coding or technology is not an option. It's a hygiene factor. Whether you want to become an aeronautical engineer, or whether you want to become a fund manager or a banker, you need to be over there as far as your technology is concerned. Technology is coding, see what are the languages which are being preferred in India and overseas, and get that. If you're getting a downtime, use that to become pretty good in technology, and use that. Don't just mug it up and leave it. Do some projects, use it in your field, because if you are a professional, a fresh graduate, pass out from a college, and you have domain expertise and you have global world-class technology skills, you have a 70 to 80% chance of cracking any interview across the world. Let me tell you this right now.
Thank you, sir. Thank you, Meghna ma'am. Pranav sir, would you like to add to this?
Yeah, sure. Can you hear me now properly? I'll just keep my video off. Maybe that's lagging. Can you hear me? My voice is clear?
Yes, sir. It's much better now.
Okay, perfect. So, sorry, I was explaining the SVB crisis that happened, and just wanted to spend maybe a couple of minutes on that, right? So, what does this bank do, right? It's a Silicon Valley bank, and it helps some of these startups to keep their idle funds, right? So, if these startups raise funds, they may or may not use entirely for capex, which they can't generate, and hence there is some fund that they have idle, right? They want to keep it with some secured bank, right? So they choose SVB because that's mainly focusing for startups, etc. So that's the background of the story, right? As a banker, right? As Mr. Dhawan explained, what a bank does is they have some funds from some of these startups. They have to put the money to use, and hence they're invested in bonds at very minimum interest rate. The relationship between bonds was also explained by Mr. Dhawan, which was whenever the interest rate goes up, the value of bonds will go down, right? So if you have invested 100 rupees in a bond at, let's say, 1% interest rate, when the interest rates in the market were at 1%, now if the market interest rate goes to 2%, right, the value of the bond will come down to, let's say, 95 or 94 or 92, right? It will come down, and hence there is a loss to the investor, and in this case it is SVB Bank. right? So that's the background that I wanted to explain. Now, what happened literally, right? So as the Fed or as the global Reserve Bank in all of these countries started increasing interest rates just to curb inflation, what happened is, let's say for that matter of, we can take the example of India, right? When RBI started increasing interest rate, these interest rates are pegged to all instruments, right? So if interest rate has gone up from, let's say, 6% to 8%, it also impacts the loan interest rate. It also impacts other assets as well, right? And hence, for some of these startups to now raise funds in the markets had become very difficult because it was very expensive. Jaise, Mr. Dhawan also mentioned, right? In the global markets, we could have raised funds at 1%. Now we are raising funds at 6. And hence some of these startups failed to raise funds. They faced a cash crunch. So they went back to SVB Bank and they said, I have put in my money with you. I've put in my deposits with you. Please give it back to me. I'm in need of funds. I want to pay my employees. I want to clear up my payroll, etc. So some of these startups cumulatively asked for these funds, and obviously because the bank had invested these funds in some of the assets, they did not have the liquidity to to actually justify these withdrawals requests from the startups. And because of this, they started selling their bonds which they had invested in. So they selling their assets to create that liquidity so that the withdrawals can happen as smoothly as it could. But because the interest rate had gone up, the bonds that they'd invested in actually faced a huge loss. They booked some billions of dollars of losses, just by selling these bonds because they wanted to have the liquidity. This spread well in the market, and more startups came to light because they also wanted their money back. They saw that as a risk of bank failure, and hence that liquidity crunch just pumped up. And that's where this trigger happened, where they had to sell their stocks, they had to sell the company as well. Now it has been taken over by one of the largest UK banks in the UK as well, right? So that's the cycle I wanted to explain, that why this got triggered, right? Interest rates have been rising for the last 18 months, but because one such startup wanted money, and because they're finding it difficult to raise it in the private markets, that's where this entire Silicon Valley Bank saga came into the picture, right? And that's where the impact on other banks and the overall liquidity is impacted in the US as well. That's the limited point from my side.
I think I'll make a slightly tangent point here. See, instead of focusing on the failures of your peers across the world, we should also see what is good in them. I mean, I may have 90 bad things, but I may have some 10 good things also. So it's up to you whether you appreciate my 10 good things or you criticize my 90 things. So that is one attitude which I think, and when I speak to my son, this is something which I coach to him also, that it's very easy to look for bad in every person, because when you're digging for dirt, you'll always find it. But if you're looking for a good in a person, it will take us a lot of time to understand what is a good, what makes this person tick. So what is Silicon Valley? And that is something which, that is a very philosophical thing which you all need, young minds need to process right now. What is Silicon Valley? They celebrate failure. Where in the world you had $1 million and I asked you, please invest in my fund. But this fund has got a historic this thing of only 1%. Will you invest? You will not invest. There's a reason, because first of all, the laws in India are very draconian against failure. Secondly, there is a social stigma of failing. People failing in classes, people failing in businesses, people failing in job, losing a job. There is so much of stigma. I think let us stop that from your generation. Let us celebrate failure. If you have not failed enough, you will never reach the heights. Let me tell you. I'm not saying you to be rash, take decisions which are, it's like driving against the wall. But, do your homework. And, obviously, I'm not trying to glorify Silicon Valley. It has got lot of toxic things also, which I don't want to put right now. The culture over there is got its own, it's called a pressure cooker. So, a lot of people, there are a lot of teen suicide, a lot of people are, going to drug abuse. There are a lot of side effects for everything. Whenever there is an excess, there will be side effects. But here in India, we have a chance. We have a generation which looks at taking chances, taking, risk-reward ratio. that is one thing which I can tell you as a fund manager. Whenever we are putting money in any investment, we see the risk reward ratio. If by putting 100 rupees, I'll only get 100 rupees and lose 100, what is the point? If I'm putting 100 rupees, I should get at least 400 rupees and lose 50 rupees. So take the risk reward ratio in your careers, in your life. And when you fail, don't be harsh on yourself, and don't let others be harsh on you, and you also don't be harsh on the others. So that is the message which I want to give. And because you don't realize what it means to be young. I mean, I can go back 30-40 years back in my life and restart my life and do so many things correctly. Maybe I was not a good listener, maybe I was not aware of whatever it is, but do that. Let's bring a change from your generation.
Thank you, Vikram sir. Thank you, Pranav sir. There were some really thought-provoking ideas from your side. And moving to the next question. How will the upcoming recession, if it happens, differ from the previous ones like in 2009? Meghna ma'am, would you like to shed some light on this topic?
Okay, so some money market economists say that this period is going to be the period of classic recession, wherein we are going to see some significant margin compression in the corporate profits. Okay, and so you can expect, some kind of compression, some layoffs we are seeing every now and then that are happening. But the good news is that we should be able to recover from this situation quickly. Also, when we are talking about GDP growth, the reports say that in comparison to the previous year's reports on recessions, the GDP will be shrinking, but on the other hand, the gross domestic income, okay, it may increase or it may grow. Okay, and similarly, when we are talking about inflation rate is expected to be to rise basically by 5 to 6% in the early next year. So the economists expect to maintain high rates of inflation controls by mixing various instruments so that they are able to control the situation. But this is like the scenario. This is how the upcoming recession is going to look like.
Thank you for the answer, ma'am. Vikram sir, would you like to add to that?
Yeah, can I add please something to it?
Yes, sir.
See,
Sure.
what is the genesis of the this recession? Sorry for this one. We had COVID, and there was the entire global economy collapsed. I mean, it was the end of the world as we knew it, both in health and wealth forms. What did the governments do across the world? They started pumping money into the pockets of the people. If you were in countries like North America, you would have got $400 per month per family person. If you were in UK, you would have got your salary assured even if you lost a job. Even in India also, the government did so much for the people so that they don't starve. So much of free ration was given, so much of, a lot of trains were made free, a lot of money. I mean, we are not a rich country. We don't have the firepower as US, UK or Germany has, but within our means, the state did a commendable job of ensuring that we don't lurch into a basket case. But what it did was, it made, not so much in India because, we are a populous nation and we have, unfortunately, many more people passing out than the jobs available. But what it did, and we have a young population also, which I'll speak about where the opportunity lies for India and Indians. But what it did in the West was that it already, though they are graying economy. I mean, Japan, the average age is 40, 42. In North America and Europe, the average age of the population, ours is 25, 26. There is in late 30s and 40s. So a lot of people retired, a lot of people were disabled or unfortunately passed away. And they have these very silly immigration policies which don't allow good talent to come in that easily. It's not easy to immigrate to any of these countries, you may be aware. So all that combination led to a very tight labor market. I mean, today, Europe has got the lowest unemployment historically. In US, for every unemployed person, there are 2 jobs available. So that is, and that's going to get even worse because people are leaving the workforce. They have made their bucks, they're leaving the workforce. So one extreme was there was a collapse in the economy. The other extreme was that there was shortage of people across the world. I mean, I was in Germany last month and I was very lucky because the day I left, week after that, they had to cancel 1,000 or 2,000 flight because they didn't have enough pilots, enough crew members. That is the kind of shortage of people we have across the world. And because of their, archaic immigration policies, none of us people from the developing countries can go overnight. There's a process. So this tight labor market is not going to go away. And when you talk about inflation, you have to talk about core inflation. Core inflation is without the volatile energy and food prices. So core inflation is rising, which means people are spending more. You look at the house prices, not only in the West, you look at in Middle East also, there are certain areas in Dubai which have gone up by 70% in the past 2 years. So that has been kind of the money which was pumped in. And if you are, whether you are a student of economics or not, study about velocity of money. Unfortunately, when we were taught economics, velocity of money is to be a footnote. But because for every dollar, every rupee, every ruble or euro given to the people, it resulted into 10 times supply of money. And that resulted in a consumer boom. And the central banks are now struggling to contain that consumer boom. And the only risk is that if they come very hard, then it might collapse into something of a, I'm not saying it'll become something very bad, but from inflation, we can go into some sort of a disinflation or depression or that kind of a situation. So that is the entire crux of the things. Unfortunately, all the cards are being held by the central banks only. So we have to, depend upon them, or we have to see. I mean, if you really want to see what's happening in the global economy or the Indian economy, read what the RBI governor is saying, read what the Federal Reserve and the European chief or Germany and all they're saying, and you will get a clue where the economy is heading. So this is the genesis of the recession that we will have or we may have. But what worse can happen is that if there is another credit event, you might see some, or if this cycle ends too soon, then the central banks will have to flood again the market with money, and that will lead to another inflationary cycle going ahead. So so we are in a very precarious situation, but don't get affected by it. You have to trust your government, you have to trust your central banks, you have to trust your parents, your teachers, and everybody, and get along. Otherwise, you cannot be, as some of you who have heard, old rock music. Jim Morrison used to say, either you are part of the system or you're fighting the system. You can't do both. So you have to when you're part of the system, you have to, sort of trust them and respect them and see how it goes. You just have to, what is in your hand is your own health and in your own career. Focus on that.
Thank you, sir. That was a really great perspective. Pranav, sir, would you like to share your views as well?
Sure. Maybe about 2023, 2008, right? Maybe I just spend a couple of minutes on that, right? So, basically, when we say it's a recession, what it means is, you see growth GDP or a slower growth in GDP, right? So, and then overall, corporate profits are not growing. Right? That's the overall sense or a very simplistic of what a recession is, right? That we saw in 2008, we are also seeing in 2023 as well, fueled with inflation, right? So inflation is, out of hand today.
Excuse me, sir. So sorry to interrupt. Your network is lagging once again.
Yeah, can you hear me now? I'll just switch off the video. I think that would be better.
Yes, sir. It's much better now.
Okay, perfect. So I was saying, basically, in the UK recently, we saw that the inflation again, jacked up to close to 10.5%, right? So what it means is every year, the cost of goods and services is increasing by 10%, in the most simple way. Now, what is the difference between 2008 and 2023, right? So 2008, the inflation was fueled by giving cheap loans, cheap credit facilities to unwarranted buyers. So let's say you are not worthy of a loan, but the banks were giving away the loan anyway, and hence that brought in a lot of liquidity in the market, because of which people were spending offshores, right? People were spending money like anything, and that led to increasing the price of houses, and that's what led to the housing bubble, because they were not able to repay the debt, right? And hence that's when they started calling the borrowers of for asking money. They said, no, take away the house, I don't have the money anymore. That's when they realized the housing prices were not actually to that extent, and that's what led to the crash, right? So you need to understand that the inflation in 2008 was fueled by giving cheap credit facilities, right? Let's jump to 2023 now, right? 2023 is actually 2020 and 2021 when COVID hit, and probably a lot of government support was given to people so that the normal business conditions prevail even in times like COVID. COVID had minimum business activity, and hence they did not want to actually get that hampered to the businesses as well. So they gave in support in terms of ration, in terms of maybe money as well, directly to the pockets of the people, so that they can still continue to spend, so that business activity is not stopped, right? The cycle will continue. Now what has happened is, because of that, the prices have gone up. The one reason is you have more money, that's one. Second reason is you see global trade being impacted because of wars, because of cross border impact because of COVID. There was an impact on import and export as well, because of which there was a lack of commodity in the market as well, which led to scarcity. That also led increase to prices as well. So this is the main reason of inflation today in 2023. It's not really fueled by something which is a bubble or a burst, right? And hence this is very different from 2008, right? Even today we are in the US. If you see, we are seeing a lot of layoffs, but unemployment is not at that level which was there in 2008. 2008 we saw around 11% unemployment rate. Today it's probably close to 4.5%. So we're not at that level, right? So we are still giving jobs. The headlines that we are seeing today is layoffs, because that's what make the headlines. But on an overall level, when you see other sectors and overall economy, it's not as bad as it was in 2008. Maybe we have more cards to unfold. That may be the case, but it's very different, right? It's not a bogus ride that we saw in 2008. If I have to put it as simple as that, right? In 2023, second reason is we are also seeing an increase in growth as well. So in India as well, if you see the last 2 quarters growth of GDP was positive, right? So that's also very different as compared to 2008, where we did not see a positive outlook on GDP as well. So these are some of the finer nuances, finer differences that we are seeing, and hence it is very, very different in 2023. I think that was the limited answer to the question that you had asked on nuances. It will be very different.
Thank you for your input, sir. And with this, we come to our last question. What are the top skills that one should ace to beat recession? Meghna ma'am, we would love to hear from you.
Okay, so I think this is really interesting because, being college students, this is something that must be coming to your mind, particularly those students who are in their final years. So basically, the suggestions would be to, diversify your experience, gain as much exposure as you can, not just limiting yourself to a given task or a given work, but different departments, or maybe the different fields that are coming in front of you, being a fresher when you are starting off with your journey. Also try to increase your exposure and visibility through the work that you are doing, so that you are able to create a brand for yourself. Try to grow your circle of influence. Okay, and over here I mean networking. These days networking plays a very important role, and the more you have your circle of influence, the more you interact with people, mentors, industry experts, leaders, the more the chances that you are going to build your network, you're going to understand, gain more clarity in terms of the confusions that you may have, and also the will help you in keeping an edge with what is going on in the market. Okay. Then also pay attention to your goals. Basically, what is it that you are looking, and where is it that you are looking to go in the next few years, so that you are able to streamline your thoughts, and you are able to work towards those areas or key skills which would be more relevant to that particular field, or which will help you in sailing past or performing well in that given field. Also, ask for feedback wherever you can to improve. Look out for role models, look out for mentors. There is no harm in asking. A lot of times, students have come up to me by saying that they feel hesitant by talking to leaders or experienced people. So never hesitate, always ask for feedback, always ask questions. The more questions you ask, the more the chances that you are going to have clarity in terms of what all you would like to learn, or maybe the questions that you may have in your mind in terms of what's prevalent at the moment. And also get help from outside. So call in experts, call in industry leaders, call in people who are experts in their own field, or maybe whom you feel you can approach to seek suggestions or maybe counseling support in terms of the time when you are confused. And these all will help you in sailing past through the turbulent times, particularly the times when things are not going in the flow. Yeah.
Thank you, ma'am. Vikram sir, would you like to add anything to that? So your mic is muted.
Sorry. So I'll be very specific, and remember these three letters, TIC. T for technology. See how good you can get in technology related to your field. Do see whatever is happening in the world. In India, we are a superpower in technology. So if you are doing good in technology skills in India, this means you are world class. I is internships. Doesn't matter whether you're not getting an internship in a foreign bank or a large mutual fund or a bank. Do as many internship even for free, but make sure that you get a certificate from the company. Don't do anything. Even if it is a family business, do a specific project for them. And, so that you get a certificate. This is what you have done. Uncle, aunt, friends, whatever. If you can get and approach people, you say, this is what I want to do for you. I'll do it for free or whatever. If you want to give me but don't say free first. Don't sell yourself short. This is what I want to do. What do you offer? I need a certificate. And C means TIC. C is for courses. Whatever free courses are available, which are up your alley, up your interest. Spend as much, watch less Netflix, use less of cell phone, banish social media, and do as many courses as you can. Free courses available in India and overseas. And I can tell you, after 2-3 years, you will, thank yourself. Thank me also, of course, and thank yourself that you went on this path. And with this, I will wish you all the very best and good luck to all of you.
Thank you, sir. Pranav sir, would you like to add anything to that?
Sure. I think I'll just maybe, describe my story, right? You guys are probably 19 or 20 years of age. I'm 25 today. In the last 6 years, probably, when I was your age, right, I started with a few things, I think, which are rewarding me today, right? Start journaling, start writing, right? I think that's something that will help you a lot. So I'll tell you why I started writing, right? I started writing because I did not have a habit of reading books or reading anything for that matter. I was not at all focused in that sense. So what I thought is, when I have to write on LinkedIn or write on, and then I started writing as a activity to start reading, right? I mean, that was the end goal. So I started writing small blogs on LinkedIn, right? And because you are publishing this on a social media platform, you have to be robust. You have to be complete in your understanding. And hence I started reading more. right? It could be a topic of your interest. It could be a topic of, maybe a novel or maybe even fiction. That's fine. But reading as a habit is very, very important. If you can't inculcate it, start writing as I did. Probably it will help you in some shape and form to read as well. Uh, 2 years later, I started writing for financial firms. I started writing for banks. I started writing for a lot of insurance companies. I write for probably more than 15 companies as a freelance content writer. So it was a hobby that started to inculcate a habit of reading. Now it's paying me money as a side hustle. Probably I have a team of 8 people now who write for me. My job is to just get new clients and probably review work for them, right? So this is something that I've built over the last 6 years. Second, networking, right? Even Meghna ma'am suggested that. But just one thing that I wanted to add to her point is networking is not about connecting with new people. It's about offering your value to new people. That's when they'll come to your rescue, right? If you come to me, you ask me, sir, I need a job. Can you help me? No, because I have another 10,000 people on LinkedIn who are reaching out to me probably on a daily basis who need similar support. Probably I won't be able to help you, right? I won't be able to reply to you as well. But if you tell me, sir, this is what I bring to the table, sir, if you are writing, I'm also interested in writing. Can you give me a project? Probably I can help you with some project. Why not? We can collaborate. We can work, right? So the fact of the matter, it's not about being better than someone else. It's not about competing. It's about collaborating with your mentors, with your peers, right? If you do that, that's the network that you build, right? That's what you can leverage, right? That's the second point I wanted to give you. Third is multitasking, right? As Mr. Dhawan also said, right? Do multiple internships, do multiple courses as well. And multitasking is really underrated. People suggest that when you multitask, you probably lose focus. I don't believe in that, right? My view is very different, and probably it's only coming from my experience. I may be wrong. It probably has worked for me well. It may or may not work for you, but I'll just maybe again reiterate my story. I was doing my CA. I completed my CFA together as well. I became the youngest in the country to clear both at the age of 22. My first salary was 10,000 rupees a month. Today, I probably clock close to a crore a year, right? At this age in 6 years time. And it has all because of multitasking, because I've been doing multiple things at a single point of time. And don't get me wrong here, right? When I say multitasking, it does not mean you do 5 things in the same hour. You pick up one activity today, do that for the next 30 days. It becomes a habit. Pick up something else in the second month. Do that for 6 months. In 6 months' time, you have 6 new activities that you do half an hour every day. That's 3 hours of your time, right? It could be reading, it could be writing, it could be, let's say, digital marketing. It could be anything, right? Anything that you like. It could be video editing as well. That's also a skill. That's my fourth point to you, that invest in skills. In the future, you'll not be probably you'll not have a job which is only backed on degrees. You'll be backed on skills, right? And the skills that you have to have is soft skills. Okay, I'll just explain these two things in the next 30 seconds. Please hear me out. Okay, technical skills is something that you can acquire, and hence you are replaceable. Okay, all these skills of coding and technology, why are you seeing these layoffs? Because these are replaceable skills, right? If I know financial modeling today, if I know coding today, if you do the same course over the next week, probably we are at the same page, right? And hence it is replaceable. I'm not saying you don't have to acquire those. You have to acquire those, but to add to that, you need to develop soft skills. Soft skills are something that you can develop, and hence it cannot be replaced, right? I've been delivering lectures for the last 2 to 3 years. I've spoken to probably more than 4,000 students over 50 sessions. You cannot replace me on that in the next 6 weeks, even if you do a communication course, right? Even if you do a networking course, it won't happen over time. It will take time for you. You'll also take probably not 18 months, probably 12 months. Maybe you've put in more efforts, but you will take 12 months to develop that, to come to that level, right? So soft skills is something that you have to focus, and soft skills include everything from communication, written, oral, right? Public presence. If you have a fear of speaking on stage, try participating in some of these events like Monexus. I think Arnav, you did a great job, hosting this event as well. So take more opportunities like these, right? Where you can speak on a forum within probably a group of 30, 40 people. That's where you will probably build this skill and probably get better at this. So public speaking is important, communication, all these skills will become important, right? And last point for you all is there are 2 skills that will help you in any job, right? So if you are not clear on what you have to do, if you are getting into finance or management consulting or anything else, right? 2 things that will help you is, one is Excel. Excel as a skill is the most important thing today. And once you know Excel, probably you can get into advanced Excel, you can go get into Tableau and your other forms of presenting the same data. That's secondary, but know Excel very well. Data analysis is something that was useful for any job today, right? Second is research, right? So a lot of work today is about primary and secondary research, right? So how well you know things, how well you can research things is very, very important. And these 2 skills, I think, in today's world, be it management consulting, be it investment banking, if you know financial modeling and Excel, I think nothing like it, right? Everything will flow. So, and these are 5 points from my side. If you want to be career ready, if you have any questions, I'm happy to help. Even after the session, connect with me on LinkedIn or maybe I'll help you there as well. So I think that's it from my side. All the very best, and I really apologize for this video lag that happened, but I hope I was able to communicate my messages. And I look forward to seeing you again. Thank you so much.
I just like to add one more thing which I missed. For all of you who want to be entrepreneurs and still have time to take that path, maybe you should start, if you have any spare money, start investing in the sectors and the company that you sort of idolize, and that is the only way you will read their balance sheets, because if you've not invested money, you will not read their balance sheets and P&L and how the stock is doing. So you'll get a hang about how that business works, and who knows, maybe you'll do better than that, or maybe you decide this is not for me and move to something else. So it's a win-win situation for you. That's the only thing I want to add.
Thank you, Vikram sir. Thank you, Pranav sir, for such thought-provoking words and also for the compliment. I'm sure we all really need to understand the importance of soft skills in today's time. So, respected speakers, it was a delight to have all of you here with us. Thank you so much for your valuable time. I am sure the participants must have learned a lot from this session. That being said, we have come to the end of the speaker session of Monexus 2023. We thank you for your participation and wish you the best of luck for the exhilarating lineup of events coming up for you. Let the games begin.
Thank you. Have a good day. Bye.
Thanks, and all the best to all of you.
Thank you so much, sir. Thank you.
Thank you.
Thank you. Thank you, everyone.
Thank you all.